in a way that is good, right? It's trying to find other areas to keep everybody informed, but just know that obviously the media's idea here is to kind of keep you glued to the TV there, make sure that they're providing headlines and keeping you entertained. Good afternoon. So this week we will cover Jobs Week as we get a little more nuanced data being covered here this week with the government shutdown and lack of general data. I'm Brandon Steele, financial advisor with Mainsail Financial Group here in Bellevue, and our goal every Thursday is to leave you feeling more empowered after each of these interactions, and hopefully bring to you some of the market news and the data, the trends we're watching. Again, weeding out some of the noise along the way. And this week, given that we're in Jobs Week but missing some data, is a good example of that, which I'll get to here in a little bit. Just as a quick reference before I jump into what we will actually cover, as a quick heads up, PCE inflation was delayed, spending numbers were delayed, income numbers were delayed as well. So most of what we're going to cover this week is being pushed out a little bit. But we did start Jobs Week, and that does mean some more delays in most of the data. But what I will cover to start is we did get the ADP employment report number just yesterday on Wednesday. That report shows that we added 42,000 jobs. So a little bit better than expectations, better than last month, maybe a positive sign, although 42,000 jobs is not a lot either. But it's likely this is really the only true signal that we'll have for a while. As again, tomorrow, it's very unlikely that we'll get the employment report and non-farm payrolls and all that good stuff due to the government shutdown. So what I did want to cover here briefly before I just kind of give a very high level update on earnings so far as well is what I'm noticing here in some of the financial media. So what I've noticed is that a lot of the news of layoff numbers and just this jobs data in general is that it seems like the media is trying to find some things to cover, given that some of the typical data we would have is not available. I guess in a way that is good, right? It's trying to find other areas to keep everybody informed, but just know that obviously the media's idea here is to kind of keep you glued to the TV there, make sure that they're providing headlines and keeping you entertained. And so they may be stretching to find data that may not be all that relevant. Where I'm going with this is what I've noticed here lately in the news is some conversations around layoff numbers in October. And again, I think just trying to keep viewers entertained. So just be cautious of some of these flashy headlines that may come out or may be created while we are in this period of slower data. That said, again, really what was covered more recently that caught my eye was this news of layoff numbers in October. And although it is maybe a little bit of a stretch to highlight that, I do want to, it is relevant at the end of the day. But just keep in mind that this is more of a feeling number than a data point. What this really refers to, if you have not seen the news, is that there's some conversation about layoffs in October being the highest in quite some time, I think 20 years or so. And so there is certainly something to be aware of there. But just know, again, this is more of a feeling than a hard data point. This is based on announcements and not actual cuts. So whether we actually land where the announcements are stating or not only remains to be seen. And again, it's maybe good that this is being covered, but just take these headlines with a grain of salt, as there may be some possibility of, stretching to find things to cover when we are in this slower data period. All right. Be sure to tune in next week before I get to the quick earnings update. We'll be covering CPI data if we get it, although that is very likely to be delayed as well. But some of the other data we may get feeding in through the course of the week, as well as we kind of catch up a little bit. But before we break this week, quick question of the week, more so tied to earnings updates, which is really important as we've talked about the Fed and earnings from Q3 and into Q4 and where that could take us ending the year here. And what I'll share, this is going back to last Friday. So, I'll kind of share a more updated version as we get more data. But so far, in general, things look good. Now, there are pockets of misses and beats and you name it, especially in some of the bigger companies, actually. But in general, the earnings growth has been pretty significant. And in fact, so far, as of last Friday, it was higher than anticipated coming into the quarter again. So very strong earnings so far. There is some concerns and some conversation around outlooks and what to expect there. But in terms of the actual earnings and what we've recognized, or these companies, I should say, have recognized, very, very strong so far this quarter. Now, there's still a lot of companies to report, so we'll continue to keep you updated. but I did want to provide just kind of a quick, scoreboard on where we stand so far here for this quarter. So I hope that's helpful. Obviously, a little bit less on the data side here this week, but hopefully we'll get some more rolling out here shortly. Be sure to tune in next Thursday. We will cover anything that does come out in the interim. But in the meantime, have a great upcoming weekend, and we'll see you next Thursday at 3.